U.S. futures under pressure after indices posted their worst day ever on Friday since 2020 as China announced retaliatory tariffs escalating a global trade war. Dow ends in a correction slipping over 2,200 points, while the S&P 500 and the Nasdaq ended lower by nearly 6% each. 10-year Treasury yield sees the biggest weekly drop in 8 months. Asian markets see another day of deep cuts as Trump tariffs ignite fears of a recession. Nikkei trades with a sharp cut of 6%, while GIFT Nifty is indicating a big gap down, opening for the Indian markets nearly 850 points down. Oil prices extend losses on a fear of a global trade war could slow down the economy. U.S. oil prices fall below $60 a barrel, while Brent slips over 3%. Gold slips from record highs following the equity market rout. Even as global leaders criticize Trump tariffs, White House Economic Council Director Kevin Hassett defends Trump's tariffs, says more than 50 countries have reached out to the president to begin negotiations. Meanwhile, the Indian government has indicated it won't take retaliatory actions against the U.S. and will continue negotiating a bilateral trade deal. The 3-day monetary policy meeting of the RBI begins today, with central bank to announce its decision on Wednesday. The CNBC TV 18 Citizens MPC suggests that RBI will cut repo rate by another 25 basis points as global growth and inflation likely to be pulled down by trade tariff wars. Hello, good morning. It's Monday morning. You've tuned into Power Breakfast on CNBC TV 18 and I'm Vinny Motiwala. Thank you so much for tuning in. But a look at the markets, right? We don't have a pretty handover that is coming from the US or the European markets, and the Asian markets opened up in the red even today. A sharp sell-off that we're seeing continuing on the Asian markets. Look at the Taiwan index, that's down almost 9.6%. Hang Seng is down 9.8%. Any of the indices that you open up on the Asian market front, whether it's the Kospi, the Nikkei, the ASX 200, all are trading with sharp cuts coming in, and that sell-off has been extended from last week after we'd seen the announcement coming in of Trump tariffs, as well as in terms of the retaliatory tariff that was there and imposed by China on Friday as well. And that is the cut that we're seeing coming in on the global market front and even the Asian markets. Indian markets, let's look at the Nifty implied open. What is that suggesting as well? A sharp fall that is also indicating a gap down opening for the Indian markets. As of now, Nifty implied open is down more than 800 points. So, that is something to watch out for. It's down 3.5%. That is what we're keeping an eye out on. Red is what we're expecting on the Indian markets as well. And that is the Asian market outlook that we have this morning. But US markets, like I was mentioning as well, on Friday, we saw Wall Street's trading session was ended. The session sharply lower. That was fueled by recession fears. And this came in why as Trump's tariff orders take a shape coming in, and now everyone is looking at that. Dow Jones, that plunged almost 2,200 points. S&P 500 ended down nearly 6 points lower. Tech-heavy Nasdaq, that ended 962 points in the red on Friday. Let's go across to CNBC's Courtney Reagan, who's joining in with us to give us a wrap on what happened on Wall Street.
U.S. markets plummeted for the second straight day across the major indexes in Friday trading after China retaliated to U.S. tariffs, raising concerns that the global trade war will turn into a global recession. The Dow, with its biggest decline since June of 2020, down by 2,231 points. The S&P 500 shedding 10% in the last 2 days, losing 322 points on Friday. And the tech-heavy Nasdaq entered bear market territory, down 963 points. The news that China would impose 34% tariffs of its own on the U.S. in retaliation for President Trump's tariffs sent markets on Friday into their worst trading day since the start of the pandemic in March of 2020. And the free fall, not helped by comments from Fed Chair Jerome Powell, who said Friday that the Trump tariffs are likely to raise inflation and slow U.S. economic growth, but that the Fed would wait and see the effect of tariffs before making the next move on interest rates. President Trump on Friday said he will extend the deadline 75 days for TikTok to divest itself from Chinese owner ByteDance. The president saying in a Truth Social post that he does not want TikTok to go dark. Several potential bidders have emerged, and ByteDance responded by saying it's in discussions for a potential solution. But there are key matters to resolve, and all of that depends on approval under Chinese law. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. Now let's, in fact, listen into those comments by the Fed Chair, Jerome Powell, as well.
I realize that the uncertainty is high, you know, what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We're just we still don't know where that comes to rest, though, and we're just going to have to see that through. While uncertainty is high and downside risks have risen, the economy is still in a good place. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters.
Meanwhile, we had President Donald Trump called for the Fed Chair Jerome Powell to cut interest rates even as tariffs roiled markets and raised fears of a rebound in inflation. Trump said in a post on Truth Social, and I quote, "This would be a perfect time for Fed Chair Jerome Powell to cut interest rates. He is always late, but he could now change his image and quickly." He added that energy prices are down, interest rates are down, inflation is down, even eggs are down by 69% and jobs are up, all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. End of quote. And when US President Donald Trump was asked about the current pain in the financial markets, this is what he had to say.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world. I think your question is so stupid. I mean, I think it's I don't want anything to go down. But sometimes you have to take medicine to fix something.
Trump also added that he was in conversation with several countries to negotiate deals. Listen in to what he had to say.
I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that because to me a deficit is a loss. We're going to have surpluses or we're at worst going to be breaking even.
Let's also listen into some reactions coming through on Trump tariff orders.
I think this is the biggest policy mistake in 95 years. I don't know why Trump didn't learn the lesson of the Smoot-Hawley tariff, because I know the Fed learned the lesson of its mistakes in 1930, 31, and 32. That's one reason why the great financial crisis did not turn into a Great Depression. We flooded the banks with liquidity, which we did not do 95 years ago. The good news, I mean, I think the Fed is going to be lowering interest rates. I think they have to lower interest rates as a result of this global shock. And yes, there will be higher inflation, to be sure, but this is a, Joe described it as a self-inflicted wound.
No, I'm still sort of 30, 40%. And the issue is we have just so much uncertainty now. Record amounts. How much does this matter? How do these tariffs get resolved? I think they're just so crazy that we're not going to have them 2 months from now. On the other hand, I didn't think we'd have them.
I think prudence on the part of the Fed would be to stand tight until we sort this all out, because I think inflationary risks are strong and inflation expectations have been moving in the wrong direction. And let's not forget, inflation itself hasn't really come back down to the 2%. So I think the market is optimistic, and I think it would be unwise for the Fed to listen to the market at this stage. Look, I think it's well past June, and I've said a few times, I'm not sure they're going to get any cuts off this year because they also have to think about the inflation side of the mandate. And they were late to the game the last time around. Some of their inflation credibility was nicked, let's put it that way. And I don't think they want that to happen again. And so if there are cuts this year, and to me that's a big if, it's certainly the second half of the year until we sort all of this out or get a better sense of what actually is happening with the economy.
On that note, let's take a look at what happened to the European markets on Friday as well. European markets plummeted as China had slapped those retaliatory tariffs on US. The German DAX was down by 4.95%. We had the French CAC, which was also down more than 4%, and British FTSE that was down 4.9% in trade as well. So right across the screen, whether Asia, US or China, and that is why a cap down start for the Indian markets. But that was the global market action and cues coming in from the weekend. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as the cues in the world of F&O. Good morning. Hormaz, Abhishek as well as Mangalam. Hormaz, coming to you first. Gap down start as of now is what is indicated for the Indian markets.
A very big gap, I must say, and it's if you're in a market where you're trying to look for positives in every possible way, the GIFT Nifty at one point was down 1,000. It's now down 850. Never before in the history of the GIFT Nifty we have seen a plunge as big as this one. So a massive gap down is in the offing, and that is of course courtesy what has happened in the US, the two-day sell-off as we just spoke of earlier on the show. The Asian markets doing no better. The Hang Seng down 10. The Japanese indices are down 6%. Trading was halted in the Japanese futures earlier in the day because the circuit limits were hit. And of course we'll need to keep an eye out for today's session as well, because as of closing on Friday, the Nifty had already given up 50% of the recovery that it had seen from the lows of the 4th of March, which was 21,964 to levels of 23,850. And now we'll keep an eye out on all of these sectors that were hit on Friday as well, as IT beat IT because of the recession fears mounting. The index was down 9% last week. The metals index was down 7.5% despite a plunging dollar. And of course the Nifty Pharma index, of course, after Donald Trump's warning of unprecedented pharma tariffs. So keep an eye out on all of these names. Of course, oil prices continue to fall as well. There is no asset class that has been spared in this fall, be it oil, be it treasuries, be it gold. All of them are in a free fall at the moment. So keep an eye out on the oil sensitives as well. What has been outperforming in a weak market is the Nifty Bank. Of course, that gets put to test today as well. The key levels to watch on the Nifty, of course, with the kind of gap down that we are seeing, all of those become redundant. But the 61.8% retracement comes to around 22,690. We are opening well below that. So the next level that comes into focus, of course, is the March 4th level of 21,964 that we need to keep an eye out for on the Nifty. So for now, it's a massive gap down that we are seeing for the index. Let's see how the day unfolds.
Absolutely. Keenly watching out for which levels are we watching out for. 21,964 is what you mentioned. Will we be able to sustain that is something to watch out for. But Abhishek, important stocks that you're keeping on your radar today.
Well, to begin with, Godrej Consumer, they have guided that they will be able to achieve the Q3 FY25 guidance that they had given for FY25. So they say that the standalone underlying volume growth is expected to be in mid-single digit, with revenue growth to be in high single digit. Now, Godrej Properties will develop a residential project in Versova, Mumbai. Estimated revenue potential is about 1,350 crores. Metropolis Healthcare Limited, their revenue grew by approximately 10% YOY, while B2C revenues have grown by 14% on a YOY basis. Now, IndusInd Bank, perhaps the weakest business update coming in amongst lenders. Deposit growth is at just 6.85% YOY and 0.4% sequentially. YOY is the weakest deposit growth that you are seeing in last 19 quarters. Advances growth is at a mere 1.35% and a decline of more than 5% sequentially. YOY, the growth is the weakest in last 17 quarters, while sequentially it's the weakest ever growth that you are seeing in last 9 or 10 years for them. Bajaj Housing Finance, strong business momentum. Disbursements are up 25% YOY and 13.5% sequentially, which has helped the AUM growth to be around 25.5% YOY and around 6% sequentially. Mazgaon Dock, over there, the government will exercise oversubscription option with respect to their offer for sale on Monday, that is today. Government got subscription of 4.01% versus 4.83% on offer. Nykaa has given Q4 update. Consolidated net revenue growth will be in low to mid-20s. Federal Bank, their ED, Shalini Warrier, has resigned. Delivery over there, they'll acquire Ecom Express for a deal value of 1,407 crores. And Tata Motors, their JLR, will pause shipment to USA for a month due to the cost tariff. Back to you.
Thank you so much for that, Abhishek. But let's move on to Mangalam, who's here to tell us what are we watching out for in the world of F&O. Good morning, Mangalam.
Good morning. So Friday wasn't very good for our markets. In fact, we saw some recovery, some outperformance. Thereafter, it was swiftly sold into. The broader markets had a bigger pain, down about 3%. And then now you have a mayhem Monday ahead if you must. The GIFT Nifty indicating a cut of almost 850 points. And that's because, the global setup is weak. So before we talk about the FNO, a word on the US indices falling anywhere between 5 to 6% on Friday. The Dow futures down another 1,200 points. Despite the recovery, it's down about 900 odd points. And the Asian indices also opening with very, very sharp cuts. So in light of that, our markets are outperforming. But, outperformance is fairly relative. These indices are down 8-9%. GIFT Nifty is indicating a cut of just about 3.5 odd percent, but painful nevertheless. The cash market flows continue with the FI selling about 3,500 crore in cash market on Friday. Not only in cash market, they also are unwinding positions in index futures. They started the series with 40% long exposure, kept reducing it. On Friday as well, they sold close to around 2,300 crores with 18,000 short contracts being added. And if you look at their exposure now, stands at 29% on the long side. So shorts have increased from 60% to 71% in just the last 5 or 6 trading sessions. On the way up, 23,000 call, 23,100 call, both of them extremely active, telling you that there is resistance at every level. Though in the morning, as the GIFT Nifty indicates a cut, the couple of things that will be tested, the 22,500 put has a fair amount of open interest. So that level will be first tested. And obviously, we are, looking at firm resistance at the 20 and 50-day moving average for the Nifty. What's important is that the Nifty Bank is still holding above important levels like the 200-day moving average and the 20-day moving average. It's been outperforming. So those levels and levels below that will be tested today as well. A couple of stocks on our radar. We have Birla Soft and Hindustan Copper, both from sectors which are fairly vulnerable to decline, have entered the FNO band.
Okay, Mangalam, thank you so much for that. But on that note, we're going to slip into a very short break. And up next, we'll get you more on tariff-related updates and developments in our special segment, Trump Watch. Welcome back and thanks for staying tuned to Power Breakfast on CNBC TV 18. And even as nations continue to roil under Trump's tariffs, several countries have reacted to executive orders imposed by Donald Trump. We have Dia joining in with us in our special segment, Trump Watch, with more.
More than 50 countries have sought talks with President Donald Trump in a scramble to ease punishing tariffs on exports to the United States, the White House said on Sunday. Treasury Secretary Scott Bessent said they were doing so because they understand that they bear a lot of the tariffs as the administration continues to insist that the duties would not lead to major price rises in the United States. Meanwhile, in a call to action against Trump and Elon Musk, massive protests known as hands-off have erupted in the US and internationally, spanning countries like Canada, France, Germany, Mexico and Portugal. The Indian government indicated that it won't take retaliatory action against the US for imposing reciprocal tariffs, focusing its efforts instead on negotiating a bilateral trade deal with the Trump administration to bring down duties. In response to the growing threat of US tariffs, UK Prime Minister Keir Starmer has vowed to announce measures this week aimed at protecting Britain's economy and businesses. Let's listen to what he said.
President of the United States acted for his country, and that is his mandate. Today, I will act in Britain's interests with mine. I understand how important this is for your businesses, as it is for the British people. So we move now to the next stage of our plan. Decisions we take in coming days and weeks will be guided only by our national interest, in the interests of our economy, in the interests of businesses around this table, in the interest of putting money in the pockets of working people. Nothing else will guide me. That is my focus.
In an effort to de-escalate tensions, Vietnam has offered to eliminate all tariffs on US goods following President Trump's impositions of 46% tariff on Vietnamese imports. The offer, made in a letter from the Communist Party of Vietnam dated April 5th, is part of the country's broader strategy to ease trade tensions and maintain strong bilateral relations with the US. As global tensions mount over the US tariff policies, Israel Prime Minister Benjamin Netanyahu is en route to the US for critical talks with President Donald Trump. he will focus on addressing the economic impact of tariffs and explore broader discussions on US-Israel relations, including the ongoing situation with Iran. Lastly, Bangladesh said on Sunday it had granted a license to tech billionaire Elon Musk's Starlink satellite internet service as punishing US tariffs raise fears for its key garment sector. The Starlink service will be unveiled at a government-backed investment summit that opens in Dhaka on Monday. That's all for today. Back to you.
Thank you so much for that, Dia. But on that note, we're going to slip into a very short break. And after the break, we'll talk to you about what's happening in the world of commodities. So stay tuned in. Welcome back. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's shift focus and talk about what's happening in the world of commodities. Good morning, Manisha. We're seeing equity markets are not showing us any respite, but should we run to the gold? What's crude doing? What's happening there?
Oh, well, absolutely. I'll start with gold first. And we did see prices fall below $3,000 an ounce as well in the Asian markets right now. But a smart rebound is what we're looking at. Opportunity buying seems to be supporting gold and silver prices both. Even as gold is back into positive, if you look at silver prices on your screen, we are up between 3 to 4% onto this one. Well, investors did offload gold to offset losses in other asset classes, but there is a statement from Powell saying that Trump's new tariffs are larger than expected and economic fallout, including inflation and slower growth, are likely. And there also is a statement from the U.S. president suggesting that this is the time that the U.S. Fed should be cutting interest rates. So all of these statements really have led to support in gold and silver, but not in other commodities. If you look at the crude oil prices, after 11% decline in previous week, we're down between 2 to 3% in Asian markets right now. Copper prices have continued to decline as well. We are trading at around 1.5-month lows on that. Nickel is trading at 4.5-year lows, so no respite when it comes to metals.
Okay, Manisha, thank you so much for that. Keeping an eye out on the world of commodities and where they are headed as well. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Nifty implied open still indicating a 872-point cap down start for the Indian markets. But up next, your Bazaar Morning Call.